Hey guys, we had an OCR change, 3.75 to 3.5. More interesting, wholesale interest rates have tracked back quite a bit, and I'm expecting to see mortgage rates across the board drop below 5%. What's driving that is the US and of course President Trump's tariffs, which seem to have caused chaos everywhere. We've seen that in the share markets, you've seen it in your Kiwi savers. But it's still very uncertain as to how that will play out. In terms of interest rates here, expecting to see 1, 2, 3 year fixed housing rates dropping below 5%. If I was fixing at the moment, I'd probably be jumping between 1 and 3 years. With the Trump chaos that's ensued and the drop in wholesale interest rates, that's assuming we're going to have weaker global growth, and weaker global growth means lower interest rates. The big unknown for us is whether the tariffs will be inflationary and lead to a price wage inflation spiral, which is what we saw over the last 3 or 4 years, where higher prices translated through to employees being able to negotiate up their salaries, and that flowed back through to prices, and we ended up in the spiral that economists hate. The difference here is weaker global growth, meaning that employees won't be in a position to negotiate that. So one would hope that the tariffs don't translate through to generalized inflation, that reserve banks and the Fed are able to look through that, lower interest rates globally. That's great for you guys as borrowers. It's not so great for you guys as investors because it pushes us back into a low interest rate world. Not COVID level interest rates. So what I would expect to see is probably a slightly lower neutral OCR, which could see mortgage rates get down into the low 4s, whereas previously we'd sort of talked about the bottom being in the mid to high 4s. So that's the difference. It's probably a 0.5% swing in interest rates, but it's very uncertain at this stage. What you've got is a bunch of economists out there trying to make sense of all of this, and what you're going to see is a lot of different opinions. There's just no clear line of sight on this. No one's been here before. No one's experienced this, so everyone's still kind of in a bit of wait and see what happens. But for us in New Zealand, it's very easy to kind of get spooked by this stuff. But for me, I think we're going to see interest rates stay fairly stable, mortgage rates in the mid to high 4s for the foreseeable future. As far as the tariffs are concerned, New Zealand got off relatively well. So from a comparative basis, I think that potentially makes us a little bit more competitive. I'm sure there are a whole lot of different perspectives on that, but a little bit more competitive. There are some other positives out there as well for us. India is not a major trading partner, and there's a potential for a free trade agreement there. Don't underestimate the size of the Indian economy. We saw what China did to New Zealand when we got a free trade agreement with them. I think the opportunity with India is just as big. And because we have a large Indian community here in New Zealand, I think our ability to leverage that when it's done will be very, very quick. Australia was super fast at getting a free trade agreement in place. I think we should have the same expectation of our government. The only challenging part with a free trade agreement with India will be dairy. I think given we're big dairy exporters, we'd love to have it in. I think for India, that's going to be very unpalatable and difficult to get into a free trade agreement. But look, let's see how that lands, right? But it's a huge opportunity for our country at a time where I think it would do a lot of good. As far as the housing market's concerned, it's pretty weak out there. If you're selling, you're possibly struggling. There's a lot of unsold property on the market at the moment, and just not getting the buyers through. It's not like that across the whole market. Entry-level housing still seems to be turning over pretty well. It's really a story of affordability gap, which is people simply can't afford the big mortgages required to meet vendor expectations. I see it time and time again. The buyers are at this level, the vendors are up here, and we're just not closing that gap. It's a bit of a stalemate. I think that's going to continue for most of this year. I don't really see a recovery in the housing market until next year, even with the lower interest rates. I just think that gap between buyers and sellers is going to be hard to close. We're at the bottom of the economic cycle. We've got some positive news on growth. over the last month, but I think it's just going to oscillate a bit. We're going to get some positive news, some negative news. There's certainly still a lot of negative sentiment out there. But there's also some things to look forward to. We've had it rough for a couple of years now, so the good news for us is it's not getting any worse. It is going to improve. There's just no miracle fairy dust that's going to do that quickly. We're on a bit of a journey, slow recovery. I think I've been saying that for a while. Nothing's changed.